Ever heard of Sysmex? It's a global leader in diagnostic medical equipment, and right now its stock is unusually low. In fact, after digging through the numbers on insightfulvalue.com, it feels like a hidden gem in plain sight. But before anything else, a quick disclaimer. This review is for informational and educational purposes only, not financial advice. Sysmex Corporation is a Japanese in vitro diagnostics company headquartered in Kobe. They design and produce hematology analyzers, reagents, hemostasis systems, and lab software. Their instruments run blood tests, clotting tests, urinalysis, critical stuff in healthcare. In their most recent annual report, Sysmex posted 508.6 billion yen in net sales for fiscal year 2024, with an operating profit of roughly 87.5 billion yen. They forecast about 535 billion yen in sales for fiscal year 2025 under their midterm plan, despite headwinds like tariffs and policy risk. From a value analysis perspective, Sysmex looks pretty solid. Its gross margin is over 50%, operating margin around 16 to 17%, and net margin near 10%. Balance sheet-wise, the company has very low leverage. Debt to equity is around 0.14, and a current ratio over 3, pointing to strong liquidity. Free cash flow is healthy too, around 49.6 billion yen in recent period. They also pay a dividend. For fiscal year ending March 2025, they declared a year-end dividend of 17 yen per share, for a total of 32 yen, which corresponds to a payout ratio of about 37%. That shows shareholder returns are part of their strategy, but they're not overextending. So, why is the stock down right now? In recent quarterly earnings, they reported a decline. Net sales down 4.1%, operating profit down 25.9%, largely due to weaker sales in Japan and currency challenges. Also, some regions underperformed compared to their prior forecasts, and they booked an impairment on goodwill. That has spooked some investors. What are the risks? The macro risks are real. Exposure to US-China trade friction, procurement policy shifts, and currency swings could hinder growth. Also, competition in diagnostics is fierce, and capital spending cycles for labs can be volatile. But the opportunity is compelling. If Sysmex executes on its midterm plan, it could hit 560 billion yen in sales and 112 billion yen in operating profit by fiscal 2026. They're also expanding into medical robotics and pushing new hematology and hemostasis products in emerging markets. So for long-term investors who believe in diagnostics and lab automation, Sysmex might represent a discounted play if you're comfortable with the execution risk. On the flip side, if those macro and regional headwinds intensify, earnings could remain pressured and the recovery may take longer. If this kind of deep dive resonates with you, hit like, subscribe, and drop a comment below. What do you think? Is Sysmex a hidden value play or a risk waiting to bite? At Insightful Value, we break down undervalued companies, crunch the key data, and explain why they might deserve your attention without drowning you in financial jargon. Visit insightfulvalue.com for the full analysis and more underrated company ideas. Thanks for watching. Don't forget to subscribe and head over to insightfulvalue.com for more.